Good morning and happy Red Friday. Hope you guys are having a wonderful start to your morning and for a lot of you beginning to your Memorial Day weekend, the true official beginning of summer. As most of us in Southern Maryland and the East Coast have seen, we are finally out of the rain issue and we are having some nice hot weather, which is perfect for this awesome weekend. So hi there, I'm Connie Fuchsa with Foote Title Group, where we know how overwhelming and stressful the home buying process can be, and our job is to make sure that it is simple, smooth. We keep you in the loop the whole process, make sure you understand everything that's going on, and then make sure you and your home are protected after closing. So we've been talking about things that happened during your settlement through our most recent series, and we wrapped that up this week with the termite inspection, and we talked about that a little bit earlier this week. And next week we're going to be starting our new series, which is basically a glossary of terms. We're going to go through defining all kinds of different terms that you may see when you go through the home buying process. So each video we do and every post we do is going to be a different term, different word you may see that may be a little confusing or maybe you just don't understand. So the first thing we're going to start with in that series is going to be the ARM, or adjustable rate mortgage, which you may have seen our post yesterday, which if you didn't, you can go back and look on Facebook or Twitter or on our webpage, on the blog, it's there, and you'll be able to see all of that information. So that term ARM, or ARM mortgage, or adjustable rate mortgage. So when the interest rates do a big hike, a lot of times, sometimes people do it, but when there's not a big hike, but a lot of times you'll see ARM mortgages when the interest rates do a big hike. It gives the person buying and borrowing the money the ability to borrow money a little bit cheaper for short periods of time. So what it does is you actually get a lower interest rate than what the current standard interest rate is, and you get to keep that interest rate for a short period of time. And if the interest rates drop overall, then your rate may go down after that period of time. So it's usually distinguished for a certain period. So say, for example, the going market interest rate is 9% and you get an ARM loan at a 7% interest rate. Then typically the mortgage would say that the ARM period is for a year, and then at the end of that year, the mortgage company determines, based on what the current interest rates are at that time, if your interest rate is going to go up or down. And usually the change on the up or down is a little bit higher than what the current market rate is, because that's one of the advantages of having an adjustable rate, is you get to be a little bit lower, but not quite. The lender, of course, still has to make a little bit of money on the money they're loaning you so they can recuperate their costs and things. So the ARM interest rate that you get as it changes may be a little bit higher than what the standard is at the time. So what it does is allow you more buying power, so you can buy maybe a little bit more expensive home because your monthly payment's going to be a little bit less. So it gives you some flexibility, and sometimes people will do it when the interest rates are really high just to get into the home that they want so they can get that lower payment, but then they actually do a refinance at some point and convert it to a fixed rate mortgage if the interest rates drop. So just a little information there on an ARM mortgage. Certainly your mortgage lender can give you much more details on how an ARM loan works, but having been in the real estate settlement business for a long time, I've seen a lot of different types of mortgages, so different things we talk about just to try to give you a little bit of information and to maybe spur some questions. Next week, we're actually going to start doing some live videos, so we'd really like to have you involved in that. Well, I guess it wouldn't be a video if it's live, right? So we're going to start doing some live postings on Tuesday and Thursday afternoons, and I'd really like to see you tune in, tell people, The other thing is, if you like the information we're sharing with you, please share it on Facebook and Twitter and Instagram, because you may not need the information. You may be a client of ours that has been working with us forever and really happy in your home, or don't need to refinance or buy anything, but people you know may need to. So I'd love it if you'd share your information, because I can't get to those people and share our goodness unless you do it for me, because I don't know the people that you know. So thanks for tuning in. Always love talking to you. Hope you're having a great day. Enjoy your Memorial Day weekend, and I'll talk to you again next week. Connie Fuchsa with Foote Title Group, because your home closing process should be the simple part. Have a great day.